Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Thank you for joining us for this market update. Today is May 31st, 2022. Brandon, a couple things we're going to touch on as far as the agenda today. Let's talk about earnings. Actually, it's come in a little bit surprisingly better than what was expected. Secondly, we'll talk about the rate hikes because that's going to become even more important. They're coming up here in the short term. And you can talk about some of the probabilities that we're going to see as far as those rate hikes moving forward. And then ultimately, what's that doing to the portfolios? Has it changed any of our approaches or anything? All right, let's jump right in. First chart we've got here, we're talking about earnings and also talking about sales growth. But again, it's one of the key fundamental data points that we follow up on and keep an eye on in regards to judging how the overall market is doing in general. But right now, out of 500 companies on the S&P 500, Brandon, 488 of the 500 have reported, as you'll see on this chart. Sales growth up about 13%, earnings growth up about 9%. But we know that was above expectations, so that's a good thing for the first quarter. Again, first quarter earnings are being reported here in the second quarter of 2022. And what we're going to see starting in July is that second quarter earnings from this year being reported. That's the one we really got concerns about. And as you'll see on this chart in the bottom left-hand corner, the bar chart, you'll see that it is sloping down. So that means the comparables from year over year are going to be very difficult to beat last year. Because you got to remember, in the second quarter last year, we were getting all those stimulus checks. That's when all the stimulus checks were coming out. You know, a lot of consumers were spending a lot of money. You know, the retail numbers were just unbelievable. And it's going to be very difficult to beat those numbers year over year. So we're expecting the second quarter to be a little bit more difficult from an earnings and sales growth standpoint compared to last year. In addition to that, the second chart that we'll take a look at is really talking about expectations in regards to interest rate increases going forward. And you'll touch on the probabilities here, but right now it looks like around 7, maybe 8 more rate increases before we get to the end of the year. And what that means is a cumulative of 1.75 to 2 percentage points higher by the end of the year. One good thing is it's dropped by about a full point over the last couple weeks. But the Fed's going to be tough in regards to inflation, so they're coming hard on these interest rates. So talk a little bit about the probabilities there in regards to what we're going to look at, because it's going to impact the market.
Yeah, I mean, that's what's been impacting the market huge this year alone. Everybody's just gauging what the Fed Reserve Chairman Jerome Powell is going to say and how many rate increases are there going to be. So some of the data we're showing is about next month, I believe it's about a 50 basis point increase. That's about a 97% chance. And then the following month, another 50 basis point increase is another about 94%. So again, I think as long as the Fed is communicating this to everyone and keeping everybody on the same page, they've made it clear that they're going to keep going because they really got to try to get this inflation under control. Maybe behind the ball a little bit, and they're really trying to catch up and make sure this is trying to get all this under control. So,
but based on probabilities, it doesn't look like they're going to come with like 75 basis points to a full point.
Yeah.
They're going to be aggressive, but based on what you just said, it looks like half a point and then followed by another half a point.
And then another really cool stat that we heard recently as well is that in the history of the Fed making these rate increases or these announcements, is never in their history have they ever fully went through as many rate hikes as they wanted to, or to be like the 10 to 12 range is what we've heard so far at this stage. So it says, but never in the history has the Fed ever really fully gone with that many rate hikes. Now, do they do 25, 50, 75 basis point hikes? That's a different story, and that's what these probabilities are telling us. So it looks like 50 is kind of where it's going to be at.
Well, you and I have had multiple conversations regarding this. After they do the hike in June, I think it's June 15th, and then July 27th, there'll be the next Fed meeting in determination what they're going to do with interest rates. We actually think there might be a time of patience where the Fed will breathe a little bit, digest the data, look at inflation information, and may slow down a little bit at that point. And we think that may be a positive thing going into the end of the year.
And one of the good things that happened last week is there was the PCE number, which is a personal consumption expenditure. That's just something that the market looks at and says, hey, how are we tracking as far as inflation is concerned? They take out food and energy because usually those are more volatile prices. Obviously, everybody knows how much the grocery store's gone up. Your gas prices, of course, as well. But if you take those two out, those tend to be more volatile. It's actually come down. It peaked in March and came down in April and came down again in May. So that was a positive note, and I think that really sparked a little rally in the market last week. So
maybe the rate increases are taking some or
Right.
making some impact already.
Yeah, so these are some of the data points the Fed's looking at to see, hey, what should we do, how much, and how often. So, again, we'll certainly keep you posted. As far as the portfolio is concerned, we're still staying true. We got a lot of protection built in with some of the buffered strategies that we've got in there, holding value, dividend payers, things of that nature, utilities. So again, holding those defensive stocks and those positions that tend to do well in this type of market cycle. So, but again, we got reallocations coming up July 1st or first part of July. So we'll definitely be back then with any updates of the portfolios. But again, thanks for joining us. If you got any questions, just let us know. Join us on, again, social media, YouTube channel, so make sure we get these videos. But this is Brandon Rogers and Trent Bradshaw with Mind Your Money.